Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, let's take a look again on the gold market. So as on the euro currency in today's video is here on gold, not too many things to talk about. As you could see, market mostly stands flat. And the expectation of the payrolls report, just minor details that are probably worth it to mention here. So on the daily chart, as you could see, market is calling around predefined level. As we talked about this in a few sessions already, and last week and 2 weeks ago. Speaking about this reverse head and shoulders, because currently for a tactical trading this pattern is actually the foundation, just because right around this level, around 1925, 1929 is the destiny of the gold market for the nearest few weeks, probably should be determined. So either we will get just collapse here, broken pattern and dropping back down to the 19 even and drop through the lows, as usually hand shoulders fails, or we will get proper action based on this pattern with the upward reversal and upward continuation. So that's how many bets right now on the table around this pattern. Just today the payroll, so maybe it will become the trigger for a corresponding action. Since we're standing in, as I call it, in a culmination point, this is very comfortable for position taking, because culmination points, they provide you the best risk-reward ratio. So it doesn't guarantee the success, so market could fail, but pattern could fail, but they guarantee you that in the case if you will get the loss, this loss will be minimal among all other possible entry scenarios, and that's the attractiveness of the culmination points. So and currently the bottom of the right arm is some kind of the culmination point. So on the 4 time frame chart, yesterday we talked about the XOP target, and we have considered multiple entry options how you could take the position, but we said that anyway first stop that you will place has to be below the XOP, because occasionally on the payrolls report market could show some spike down to complete the XOP. It could be some rising of the volatility, especially on the intraday charts, and you should stay aside of all this mess just to not be washed out occasionally. So you have to give the market space to breathe, and that's usually accompanied by just placing more extended stop in the beginning, and definitely it has to be below the XOP. So I will not repeat all the possible ways of the position taking that we have discussed yesterday. There's 3-4 different types of the position taking if you would like to. That's all about the bulls. For the bears, you have to get clear signs of the hand shoulders failure. And that will happen if market will just break it down, drop below the XOP, it will remain in this area. So you should try to escape possible drop and return. So some kind of the wash and rinse action, price rejection when the market first drop down very fast, and then at the same speed return right back up. So this will not be the break of the hand and shoulders. The break will be if it will just break down and remain here. So that will be the sign that probably you could start thinking about taking the short position, start planning the entry. Meantime, currently I still watching for bullish scenario, so hope that maybe hand shoulders that we have probably will work. Whoever's patching on a daily chart, but at the same time recent performance that we see here makes me think that still this drop should happen to the XOP, just because if we'll take a look at the hourly chart, that is a sideways downside consolidation. Yes, you could recognize the kind of the hand and shoulders, but guys, hand and shoulders should not be too choppy. It's too choppy pattern. You can see also at this tails to the upside. It means that the bearish pressure on the intraday charts is rather strong. So you can see every upward bounce immediately was sold off and market returns to the big down. So these tails show you that scalpers and market makers are taking the short position with the possible downward breakout. Maybe they, by the way, also making a bet on the possible payrolls report. So despite this hand shoulder shape, I see here tight consolidation and bearish dynamic pressure, because you can see that price gradually is slowing down while trend stands bullish, and this is not good sign. So since you know that I'm a bit conservative, and from that standpoint, personally, my approach to the current situation, I prefer to wait when this pattern will be resolved. Particularly speaking, I suggest that it might be, as I said, drop down, completing the XOP target. So that's why in this area, I would take position long. I mean, I'm talking about long position. I would take the long position only if I using the scalp step in. So for example, I could take some 30%, for example, here, waiting for a possible drop down. Or even in the current situation, maybe it makes sense to just wait when the XOP will be touched. So one of these two ways might be used. So that's actually what we have, just minor nuances right now on the gold. Let's see what will happen on the payrolls.